In an op-ed to the Portland Press-Herald, Senator Susan Collins listed 3 types of families that will receive a tax cut. A single mother with 1 child who earns $35,000 would get nearly $1,100 back. A couple in Maine with no children who earn $60,000 would see their taxes fall by more than $900. And a couple with 2 children earning $60,000 would get a tax cut of about $1,700.
We went to a certified public accountant to verify those numbers.
At this accounting firm, the rush is on.
This year is even more crazy because of the changes.
Eric Purvis is a tax expert and says Senator Susan Collins' examples written in an op-ed about the new tax plan are accurate, but not perfect.
Those are very specific scenarios, so not everybody is going to see those tax savings.
A single mother with 1 child making $35,000 a year should save $1,100 in taxes. Purvis crunched the numbers.
So the biggest change is the increase in the child tax credit from going from $1,000 to $2,000. So that taxpayer is going to see a $1,000 tax benefit.
And so Susan Collins' claim in her article is accurate.
That's correct.
For a couple with no kids making $60,000, Purvis says the decrease in tax rates and increase in standard deduction will benefit them.
Their income taxes are going to go from $4,900 to $3,900 for a savings of $1,000.
Again, Collins' claim is correct. For a couple with 2 kids making $60,000, again, the child tax credit is a big win.
And that's where they're seeing the biggest tax savings. So their tax savings, net tax savings from one year to the other is about $2,000.
Another check mark on Collins' claim. However, Purvis says these examples don't take into account itemized deductions like property taxes or excise taxes on cars.
And that doesn't fit the fact pattern for a lot of taxpayers. People who own their homes are going to deduct their home mortgage interest, they're going to deduct property taxes, the real estate taxes that they pay. Those people are not the people in the examples that Susan Collins laid out.
Someone who deducted those taxes in the past could have ended up with a lower taxable income than those who had used the standard deduction.
So in the past, that might have been a sizable deduction for a lot of taxpayers. Going forward, that's only going to be $10,000.
Purvis says that new $10,000 cap on state income and property taxes, combined with the new standard deduction, the loss of personal exemptions, and the decreased tax rates, could make it a wash.
So those two kind of offset each other, but you may have a taxpayer whose tax is not going to change at all as a result of all these tax changes.
Purvis says every person's situation is unique based on the number of kids they have, if they own property, and their income. So really you won't know if you're a winner or a loser until you sit down and fill it out. But now that you know what to expect, hopefully you won't be surprised come tax season.
And since you did all the research on this, are you planning to do all of our taxes now this year?
Absolutely not.
Fair enough.